Hey, welcome to the show.
Thank you. It is good to be here. Long time
Uh,
listener, first time
First time caller. Yeah,
yeah.
no, normally we're doing this in person, but thanks for indulging me and letting me record. For the viewers of which we have millions and millions. For those who don't know you, maybe you could introduce yourself.
Yeah, sure. So I'm Harry. I'm an investor at Canapi Ventures. We are a fintech focused VC firm. I live here in New York. I've been here for a little over 3 years now. Started my career at Goldman, also here in New York, doing investment banking for their financial institutions group. So it was a lot of bank M&A in the time period, sort of 18, 19, 20. There was a lot of the FinTechs, consumer-focused neobanks were emerging. Banks were scared, and so they were coming to us, um, asking us what to do. M&A bankers tell them one thing: do M&A. And so, the idea kind of being, if you are a bank and you're spending $1 billion on tech, and there's another bank who's spending $1 billion on tech, if you merge, you spend $2 billion on tech, and then you can compete with Robinhood. But that didn't really work for a lot of reasons. Basically, you ended up spending 2, 3 years merging cores. You had a ton of legacy tech debt. Neither side was that innovative to begin with, for the most part. Um, and Canopy has really started to approach that problem from a different angle. So rather than encouraging banks to merge and get to scale, what if you could help them partner with the best sort of B2B fintech and SaaS companies out there, get to innovation parity that way? So 2019, we raised about 650 million from about 50 regional, super regional, and community banks in the U.S. Really function like an external corporate VC. We spend a ton of time with top of the house, but also business unit heads. Where are you feeling pain? What's top of mind? Where are you spending time? Use that to inform where we spend time in market, but really go the other way. So talking to VCs like yourself, spending time in market with founders, doing our own research and running it up the pipe. So since we raised the second fund, Fund Two, we have about $1.5 billion under management. Invest sort of Series A through Series D, so we call it venture through early growth, and broadly anything B2B, fintech, or SaaS.
And Harry is certainly, if not a boss of the rising fintech mafia, he's definitely a capo at the very least, and a good friend that I've had the pleasure to invest with over the years, and certainly look forward to doing more investing alongside. And you've written, at least posted somewhat extensively, now written somewhat extensively about the different ways that banks are partnering with B2B software companies to deliver modern experiences and capitalize on the distribution they already have. It has been talked about by others as well. This, I guess, coming wealth transfer from the baby boomer generation to folks that are a little bit more in our cohort. Estimates vary, but 80 trillion as a starting point is not outrageously unreasonable, I suppose. And I think you have what is perhaps a somewhat contrarian perspective here, though I think it's very much informed by your being in the weeds. You're spending so much time with banks and you're spending so much time with startups that serve banks. So maybe you can unpack that a little bit for me.
Yeah, sure. So I mean, I think for to set the table here, I think if you are a bank today, it is a little bit scary. You basically have this situation where you don't have much customer loyalty. So customers are moving both on the business and on the retail side. Interest rates mean that your traditional business, which is borrowing in the form of deposits and then lending, is not as lucrative or efficient as it used to be. So you have NIM compression. And then with this great wealth transfer coming, you have this specter of a potential massive deposit flight over the next 20 years. So with $80 trillion changing hands generationally, something like 80% of it is going to move institutions as well. So not only has the traditional business, which is borrowing and lending, come under pressure in this new interest rate environment, not only do you have this sort of lack of customer loyalty and a lot of deposit flight, but you also have this sort of gloomy future as deposits will, and assets under management move as money changes hands. And so all of that's scary, but at the same time, it's kind of an opportunity for banks. And so I think it's an opportunity in two ways. The first is that because fee income, which historically comes from wealth management and other fee related services like payments, is so important for banks right now. it's a really good time to start focusing on it. And then any
Mhm.
investments you make in generating more fee income and getting closer to your customer should actually make the relationship stickier and set you up to manage more wealth down the road when it changes hands. So yeah, $80 trillion leaving or moving institutions is tough for the institutions that it's leaving, but it also means it has to land somewhere. And so,
Yeah.
as a bank, your goal should be to be the right place for it to land.
Are you seeing any examples you can talk about of people that are taking what you see as like the first correct step to do this? Or if you don't see examples of banks doing this the right way yet, where would you start if you're talking to a bank leader?
Yeah, so I think there's basically, what I'd say are three different value opportunities for banks in this great wealth transfer. And the first is what we'd call marketing. And so you basically have this problem with wealth, which is that wealth is really just meant for very high wealth advisory is meant for traditionally very high net worth individuals. Banks have relationships with millions of people in some cases, but they're not all high net worth yet.
Mhm.
So you know that these customers are going to receive some portion of money over time. You also know that they're going to earn and they'll make investments, right? And you have a relationship with today. But you have a relationship with them today. But so then you're faced with the problem as a bank of how do you market a solution that your customers probably can't use for 10, 15 years. And I think the very best banks are holding their customers tighter and moving to what feels like more of like an advisory relationship to the mass market. And so what does that mean? Basically, today, if you are a consumer, you are managing your finances across 10, 15 different platforms, right? You have your DDA with Chase. You might have a savings account there too. You have a couple credit cards. You have a mortgage with Quicken. You have student loan with SoFi, auto loan with Ally. You're using Robinhood for fund trading, Schwab for real, and Coinbase for crypto. You're using Betterment or Wealth Fund for retirement. You're doing tax at H&R Block. You're trading for crypto in your MetaMask and Phantom wallets as well. Maybe you're giving with Daffy and you have a credit card that you're using for rewards. And it just kind of
This
complements.
you're describing the American dream. I would love to hear a European reaction to I have
Right,
6 credit products and I'm
right,
normal.
right. Yeah, I mean that's not even a weird stack, right? That's
Yeah.
a probably pretty typical stack. And banks are actually pretty well positioned to offer a lot of those things.
Mhm.
And over the past few years, you've seen these rise of either D2C point solutions or actual B2B focused embedded solutions. And so, what you want to do as a bank, right, is rather than encouraging your customers to go to these other platforms, how can you embed them in your banking experience and deepen your relationship, get access to a ton more data, and potentially bring in fee income from it?
So I'd love to talk about this because I think you especially have a really unique perspective here. Any consumer, anyone who has looked at consumer fintech that is watching this will have had the experience of either investing in a company that couldn't get to product market fit, going consumer, and then said, oh, we're pivoting to B2B and that not working. Or you were at least pitched by a company that said, we built a consumer product, we couldn't get the unit economics to work, but now we're going to B2B. When you think about companies that are successful in building a sort of an offering to a bank that delivers a consumer like experience to their end customer, are there common approaches that you think set them up for more success relative to those that kind of pivot into it?
Yeah, absolutely. So, I mean, I think that everyone has had the experience. Anyone who banks with, one of the large money center banks has had the experience of logging in, and it feels almost spammy, right? And it's
Mhm.
like, oh,
Yes.
try this credit journey thing, and it's like, oh, this will, refinance, and it's, you kind of want to
Yeah.
go in
Any
with
any offer you
right?
take
Right.
is going to be a horrifying mistake.
Yeah, right.
Like,
And it feels, yeah, it just feels wrong, right? And so I
yeah.
think the best ones are ones that are deeply embedded
Mhm.
and recognize that large financial institutions, while they have a lot of reach, they have a lot of customers, they have large balance sheets, they're not typically known for their engineering prowess. And so, how can you deliver a product, that isn't just a headless API, that might have the sort of SDKs and building blocks to make it really embeddable, a deep white label that feels natural and also ties into the experience. And so I guess, as I think about that consumer stack, I think, I always say one of the best places to start is tax, right? Everyone has to do taxes every year, right? And for banks that don't offer it to the mass market, you're actually sending your consumers out to H&R Block or TurboTax, which is some accountant, where they're doing their taxes, and then who knows where they send their tax return, who knows what they do with it. A deeply embedded experience, right, that sits in the mobile or online banking app or platform would get you, you already have all the information on the consumer. You can get them
Mhm.
halfway through filling it out, right? Why would they
Yeah.
have to enter their SSN or their address? You already know all that stuff. When it comes time to actually file, you already, well, you're their bank, so you should be able to automatically offer them direct deposit here. In fact, if you know that they're getting a tax return, why don't you just offer them the tax return up front and they don't have to wait the 2 weeks to get it back?
Mhm.
And all of those things are things that banks are uniquely suited to do that a TurboTax or H&R Block can't do. And if you can embed that deeply and make that experience painless, just part of something that you do at your bank, well, boom, you just did your taxes.
Mhm.
By the way, the tax is like the most complete, robust, end-to-end financial picture of a customer you can get. So all of those questions that you might have about how wealthy are they, where else are they holding assets, do they have kids, all of those things you'll find out they're doing taxes. Um, a second one I think about is estate planning. It's super
Mhm.
obvious. Anytime anyone, but people that are young, do estate planning, when one or two things happens, they make a major purchase that they don't want to saddle their loved ones with debt. So you buy a house or you have a kid. And well, what do banks do a lot of is give mortgages. So you can seamlessly weave estate planning into a mortgage process. It becomes a really good point of sale for it. And if you're doing taxes for them, well, you'll know when they have a new kid, and it'd be a really good time to reach out about updating your estate plan. And so this is what I mean about deeply embedding. And you can kind of go down the list here. And so the next thing you can do is retirement. You can think about integrating brokerage. And when we talk about marketing, it's kind of marketing, but you're actually bringing them closer. Your customers are now spending more time on the banking platform rather than these other various platforms. And
Mhm.
you have the subtle effect of kind of moving into this advisory role where consumers start to think of you, the bank, as the place where they do their banking, yes, but also their taxes, their estate planning, their brokerage,
Mhm.
their retirement planning, all these things that you would expect from an advisory relationship.
From a technology perspective, is there a why now for you? You were describing sort of life events, which, as long as I've been around fintech, life events, sort of life events businesses or businesses that can identify life events, that is kind of the holy grail for especially insurance distribution. Is there something that's changed for you? Not just the opportunity that yes, there's $80 trillion that is going to be moving, but technologically.
Yeah, well, so I'd say there's two things. One, there's the secular point, and then there's the technology point. So the first on the secular is that this has, by the way, always been the right thing to do, or a really good strategy for
Yeah.
banks. It's really hard though to think of that as a wealth strategy because wealth advisors are typically older people. They have their good book of business, and it's really hard to go to a 55-year-old wealth advisor who's managing a couple $100 million, making a lot of money every year, and say, "Yeah, your business is broken. You need to start integrating tax preparation for retail consumers." To be like, "My business isn't broken.
Mhm.
Get out of my office." And so it's been really hard, I think, to pitch these to wealth divisions, and consumer like retail banks have been so busy with the really good business of banking, of taking in basically zero, low, no cost deposits, lending them out, that they haven't been focused on does it matter if we're offering taxes or estate planning to our retail customers. So it's kind of been the wrong time for no one would want to do that at the bank. But now that you have some of those macro problems where banks are really facing a deposit flight and a loyalty issue, and the traditional business of banking isn't as lucrative, I think you actually have people on the retail side who are willing to say, okay, what else can we do to attract, retain, and expand, our relationship with our customers. So that's kind of on like the secular sort of macro. On the technology side, I think the simple thing, and this is a big trend in fintech, is just APIs. I think people are getting a lot better at leveraging data, embedding data. People are getting savvier about working with it. Um, and so you basically have a lot of really talented entrepreneurs building in this space, and they're not building siloed, walled gardens. They're building open platforms that are meant to be embedded, where data is meant to move seamlessly between one platform to another, which is an underpinning of an offering like this.
How do you think about the balance of building something that somebody's going to want to stay with, especially the kind of high value customer like the Henry, that when
Yeah.
they actually become wealthy, they're going to want to stay with this platform? How do you think about that? The trade off between building for that customer and kind of the marketing, the services you need versus just using kind of more technology enabled services to be able to address folks at a cost level that actually makes sense. So you don't actually have to wait for them to get rich. You can
Yeah.
just deliver a high quality service at such a low cost that the economics suddenly make sense if you're already on the customer relationship.
Yeah. So I mean, like, I think in many ways they actually go hand in hand. So I mean, I think in many ways, if you think about again, if you think about what uh, like a family office or a wealth advisor does for wealthy, high net worth clients, it kind of looks a lot like what you're doing today with your consumer stack, right?
Mhm.
They are managing their investments. They're, they're LPs in specific alternative investments. They're either working with or doing your taxes. They're doing your charitable giving, your estate planning for you. So it's actually that experience is that it's the same thing for high net worth individuals. You just have an advisor and a team under them that's doing it for the wealthy client. And so I actually think a lot of what the family office for, the mass affluent or, the wealth advisor model looks like is probably an integrated solution that pulls in the taxes and estate planning and investing and retirement and all that. And so you actually kind of are doing that, I think, in many ways.
Mhm.
Now, I think there's a lot of really interesting things that you can do now, some of it with the generative AI, some of it just with better approaches to data. Um, and I think one of the things that we think about a lot is you should really think about expanding your tiers so that, maybe it's the base tiers, everyone gets access to these products, right? The
Mhm.
taxes, whatever. As you go up and you invest more, you'll get access to more sophisticated products, ETF builders, maybe some fixed income trading, maybe some alternatives. And then, maybe that comes with a certain amount of advisor time. Weaving through all of this is, you have some generative AI powered chatbot that can answer basic questions. And most importantly, you really want to make sure that you're focused on graduating,
Mhm.
right? And so you don't want, like, the worst thing a bank could do is do all this and then just not know and not graduate them into advisory, right?
Yeah.
And they're like, yeah, he did his taxes, it was great. He has a couple million, and that doesn't
Yeah.
turn
And
into
that's it.
anything, right?
Yeah.
And so super important through all this is that you set those thresholds, figure out what you can do technologically. I do think it should be expanded. We have too much efficiency and too much technology for wealth advisory to solely be the domain of people with $5 million, $10 million or
Mhm.
more, right? And you
So
lower those tiers, yeah.
do you think banks need, I mean, do you think the bundling of these types of products into the banking experience, do you think that will require a sort of new CRM for banks to integrate with all this information and like allow banking reps to stay on top of customers that are becoming wealthy quickly, or are on that trajectory?
Yeah, I mean, I think absolutely. So, I mean, here, like, there is, yeah, I mean, there are like endless examples, right?
Yeah.
I mean, I bank with Chase.
Yeah.
Probably once or twice a month, I get a mailer for their Chase First Banking, which is a product
Mhm.
for kids.
Yeah.
I don't have kids. I'm not even married, right? And it's like I've been banking with this bank, my entire adult life, and they're sending me. So that's a failure, right? And so I
Yeah.
think one of the biggest benefits of embedding things like tax preparation and estate planning is that you get a holistic look at the customer. You need to be feeding this data somewhere. So there's a whole range of platforms out there today that are helping banks do this. I think that is going to be key to this whole thing, which is making sure that the data that you're getting isn't just living in a vacuum,
Hmm.
and then making sure that you're accurately feeding the CRMs, whichever ones you're using, um, so that advisors know when to reach out, but also so that the bank knows when to reach out.
Hmm.
There is, one of our portfolio companies, MX, does a lot of data enrichment.
Yeah.
And so what they'll do is they'll take all this data that you have in a customer and they'll combine it with other consumer signals to give you insights around marketing. So if you have a customer and they're spending, they have a, you could have a customer with a savings account titled mortgage,
Hmm.
and they've been saving in it for 10 years and there's $500,000 in it and they're spending all day at work on Zillow and no one's reaching out to them from the mortgage,
Yeah.
right? Like no one. It's like what more signal do you
It's
need?
wild.
But that's the kind of signal that you can get, and so you can really deliver the bank. And this is why I think some great platforms is they have so much to offer, big balance sheets, a lot of capabilities. If you can weave a really intelligent data layer through it, you can start to unlock a lot of that, and your customers become one, the bank becomes a partner, but two, your customers become a lot more valuable.
To push you a little bit, and I'm curious because I know you've spend a ton of time with early stage startups. I know you spend a ton of time with banks who this is sort of being framed to, I think, in addition to startups. And I'm sure you've spoken about this with some of your bank LPs. Why won't this work, or why won't this opportunity be seized to the extent to which there is pushback? Because no one wants to push back against opportunity, but what are the risks?
Yeah, I mean, so I think as we've sort of developed this thesis, I think a lot of what we've thought about are those things. And the pushback that you get is, we're the biggest pushback for banks right now is it's kind of a tumultuous time, right? And
Yeah.
so it's not really focused on funding new initiatives. It's kind of a more survival mode, making sure the core business is running.
Yeah.
I think, as we think about some of the embedding stuff on the front end, right? Those things should be additive to the business today, and I think it should solve some of the longer term problems as well.
Mhm.
So I think you get less pushback on that. I think the biggest issue that you get is the data piece, right? Which is, do we have the data? Can we make use of this data? Or are we just ultimately going to be buying and integrating these things and not getting that much out of it? And so I think that's it's probably even less pushback than it is just a real limitation on the bank end. And I think that's the biggest hurdle that banks will have to overcome for this to be valuable. Um, the other thing, right, is that banks are just kind of they're challenging to work with from an early stage startup perspective.
Mhm.
They're huge, really tightly regulated industries. They require a lot of startups, a lot from their startups partners, um, and so a lot of it is just like folks framing this as a growth mindset.
Mhm.
But like I said, I think a lot of that is going away as people look around and realize it's kind of an existential moment.
And do you think the sandbox approach has been like largely successful in at least getting folks engaged early, setting up environments where startups can start to play with data, or has that been more of a distraction? Curious what your perspective is on that.
Yeah, I mean, I think it's been good. I think it's still hard to do that.
Yeah.
You anytime you're dealing with real data, it's tough. Anytime you're dealing with a regulated entity, it's tough. And so, if you're an early stage startup, what I always recommend is finding, a smaller financial institution, structuring it as a design partnership, helping them build out, working with them to build out their needs. I think there's a real opportunity sort of at the lower middle market segment where you have smaller banks that are a bit more nimble than larger banks. You're usually interfacing with senior leadership, not just the group head. And they're willing to try things. And I've also found that credit unions are really effective sort of early partners for
Mhm.
startups because, one, they're really focused on their member experience and they kind of prize that above
Exactly.
all else. So a lot
Yeah.
of the efficiency, a lot of the quarter needs to be this, that stuff, while it's still important, is less of a focus. And so they're
Mhm.
willing to try things if members are demanding it. Um, but yeah, I think it would really, I think the design partnership, sort of the POC model, can be really effective for an early stage startup, and then work to build those towards enterprise agreements over time.
Tremendous. Well, Harry, thank you so much for your time. I know me and the rest of the Bestco team are very excited to see you next week at Money 2020 and the rest of your crew over at Canapi.
Awesome, likewise, man. Appreciate it.